A lot of changes in the market, a lot of uncertainty, and it's causing some home buyers to have buyer's remorse and many to cancel contracts, forget about buying a new home altogether, talking resale and new construction. So, we're going to review this article from about a month or so ago, and they're looking at data supported from Redfin, and the title is Home Buyer's Remorse. Thousands of Americans are canceling signed contracts. What you need to know before you back out of a purchase. And we'll get into that a little bit, but also want to talk about some new homes and what I'm hearing when I talk to builders. Now, here it says the housing market is inching up slightly, but still remains relatively cool as home buyers contend with increasing interest rates and high prices, and some are even pulling out after they sign the dotted line. About 65,000 home purchase agreements fell through in December, according to Redfin. Now, this is all across the country, not just here in Phoenix Metro. Now, when it comes to getting out of a contract and cancellations, it can vary from case by case and what contracts you actually signed, and if it's a resale, if it's a new build, a complete new build, a spec home. A lot of different factors play into what that looks like. So, why is this happening? Why are people canceling? Well, for a lot of people buying a new home, they went under contract on that home when the rates were much lower. And if we look here, currently they're around 6.7%. But I heard of some clients, not my clients, but seeing from other builders, depending on where you're building, could take 10 months all the way up to 24, depending on your home, your builder, supply, all of that. But, right now, rates are around 6.7. If we go to a year ago, they're around 4%, give or take, slightly under even. So if you're approved for a loan and you are at that 4% range and you just go about your life and they building your home, and now it has come time for you to look at what that monthly payment is. Hopefully stay on top of it. Well, now you realize, shoot, I can no longer afford that home. Either the bank says so or they'll stretch you so thin. Now you're house poor. Well, what do you do? And now some builders, depending on the contract, they're allowing clients to cancel because they can no longer finance the home. And if there's a financing contingency, well, then clearly they are out there because they don't get financing. And what we're seeing a lot of these builders do is now they have these inventory homes on their books and they're turning out, selling them. And depending on where they're at, they may be making a profit still, but a lot of times they're offering incentives, either closing cost incentives, low rate buy down, which already locked in. Several offering a 4.99%. Several are offering 4% seller concessions. So we're seeing a lot of those wanting to get rid of them. However, some builders in their contracts, there are no contingencies. So your earnest money may be forfeited if you canceled. Your deposits may be forfeited. The builder may even call for the note to be due. Again, it's case by case and whatever your contract says. And you may need a lawyer at that point, not a real estate agent. But think about being in that position where you have your dream home, you have budgeted, you have financed, or not financed, but already thought about that, and you start the build process, and you're at 4% rate. All right, that's affordable. They go on, and who could have predicted that rates go from 4 to 7 or higher? And now you're looking at that payment, and one, either you can't afford it, the lenders is not going to give it to you, or they stretch you so thin, it is not doable. So what do you do? And can you afford to give up? Depending on what that money is, could be just a simple earnest money deposit. I don't say simple, but maybe 5 to 10,000. But for some people, it could be 6 figures based on the deposits that they've put down on that home, depending on how expensive it is. And just to lose that amount of money. Now, hopefully, there is some sort of common ground, but new construction homes and the cancellations are occurring. Now, it is a little bit easier to cancel if you are on a resale. And also, the contract time frame is much, much shorter, and that way there's less chance of something coming up. But let's say you are under contract and rates were 6% when they dropped down, but you did not get locked in. They jumped up. Maybe a bank crash happens. I mean, I've heard that's going on, and they go up. And now you can no longer afford that home. Well, the contract here that you most likely have written is subject to a finance contingency. So you can get out that way and typically you can get your earnest money back. So at least you are protected there. But when we take a look at what is going on in this Arizona market, and we're going to look at the Cromford Market Index, something I go over again quite a bit, and we're going to break it down just a little bit more. So here we have the Cromford Market Index. And if you remember, 100 is balanced, above is a seller's, below is a buyer's market on paper. And you can see the trend over the last 22 years of where it was. And obviously this was no bueno, not good times for home sellers out there or the economy in general. And then it just kind of stayed, relatively in range. And then here is when crazy COVID times, crazy low rates, and that frenzy of how high it got. And then here in April, May, that is right when rates went up and buyer demand really fell back. And then there saw a push in inventory. And that went until right here, October, December. And then rates started to get improved. And we also had a pullback in inventory from where we were in the fall. And now that Cromford Index has gone up. And this doesn't show it, but we're actually at 134. So on paper, we are in a seller's market. But why are we seeing that above 100? And yes, rates are higher, but supply and demand. Again, looking at the trend, study the trend, see what happened, and put all that data together. So here's the supply. Again, 100 balanced, pretty balanced, and then pretty low. And '08 happened in the crash. And then supply was insane. And then just trickled downward. And here we are back in peak COVID times. And our highest average sales price was right around May, June, that time. And that is right when supply was right at its lowest. And then it went up again, but still never really above 100. So that low supply helped keep prices from falling. Again, our average sales price reached a high of around 600,000. And then when it started to pull back, when things slowed down in the fall, the average was around 510. And now it has gone up to around 541. As you see, that supply has fallen. Now, again, demand also is not great. However, with that low supply, it has really evened each other out. And then you look at the trend of the demand, really fell, really high, stayed pretty much, I don't say linear, but within range. And then that demand jumped up and then it fell, just on trend with what we're seeing in the CMI. Again, it is still below 100. So technically, buyer's market, but supply is low enough. Now, if we start seeing supply increase here, I believe you're going to see a lot more cancellations and you're going to see just homes sitting. And then for that crash that so many of you are wanting and waiting for, if we start seeing supply go up, then that is when that's going to happen, especially if rates continue to rise. I don't necessarily foresee that happening, but who knows with some of the tech layoffs, other factors. But for right now, it's going to take a while. And real estate isn't necessarily a short-term thing. It happens over years and years. And it may not happen this year or next year. It may take 3-4 years for that supply to get to that level of where that crash happens. But just if you are building a new home, prepare for the worst. Do not stretch your budget so thin if something bad were to happen that you can no longer afford this home, putting your deposits and earnest money at risk. Also, understand the contract you signed. It is your contract, it is your money. If you have questions, ask your agent, and just again, be prepared for the worst. And also maybe consider, if you want a new home, but maybe you're in a shorter window, look at the spec homes, those quick movements, the homes that people had to cancel on. Obviously do your inspections. It's a whole nother video, but a lot of these builders, they are offering rate buy downs, rate locks. I mean, several offering, again, the 4.99. Client just closed getting a 4% concession, using that to buy down rate. But those typically are not offered on brand new homes, but you'll see it more frequently on the quick move-ins, the spec homes, the inventory homes that they have. So if you want to see a list of those certain areas, send me an email. I'd be happy to send those over to you. But again, just this market has been interesting to watch, again, with the bank failures, the rates, the supply and demand, everything else that's going on in the world. And I plan on bringing you just the most up-to-date data as possible, trying to leave out my own opinion as much as possible. But let me know, what do you think is going to happen? When do you foresee it? Because I know a lot of you think this crash is coming. When do you think it's actually going to happen? Do you see inventory getting to that level of where we have 6 months or more of supply? Because right now we're around 2.4 months, give or take. So again, on paper, seller's market, but sellers out there, it doesn't mean you just throw a price on it, sign in the yard. Those homes aren't selling. Priced well, shows well, they're gone. So again, let me know what I can do to help you. If you're looking to move here, you know what to do. Find me and my contact info in the description. It's Rich Brecklin, Real Broker, your Arizona real estate agent, and I'll see you next time.